fact, Hindalco has reported its quarterly earnings earlier this evening, and in fact, the company saw its profit fall over 56% to 2,049 crores versus 4,741 crores on a sequential basis. Meanwhile, the company's revenues is also, that revenue figure has remained flat at 66,521 crores to make us in fact, to help us understand these numbers and the fine print of these numbers, we're now joined by Aditya, Valikar, Senior Research Analyst, Metals and Power, Axis Securities. Thank you very much, Mr. Valikar, for joining us here. Help us decode what these numbers essentially mean for the company. What is your overall assessment of the fine print of these numbers? Mr. Valikar, if you could respond.
Hello. Yes. Can you hear me? Can you hear me?
Yes, Mr. Valikar, I can hear you. Go on and please respond. Give us your first thoughts and your first reaction on the numbers that you're seeing on your television screen. We're just breaking these numbers by Hindalco. Q3 fine print of Hindalco. How do you see these numbers, especially as far as the quarter gone by is concerned?
Yeah, good evening. So the numbers looks good, especially on the upstream aluminium front. So the EBITDA has stood strong with EBITDA per ton almost crossing $1,570 per ton. And we know that Novelis was weak this quarter because of that Oswego fire. But consolidated EBITDA was offset by the strong performance from aluminium division. And it has almost stood in line with the consensus of 8,000 CR. So overall, it's a good show. I think going ahead, we will have to see what the management guides on their expansion projects, which so far will be the key driver for the company going ahead.
Absolutely, Mr. Valikar. What is going to be the key driver of the company? Meanwhile, it will also be interesting to see what is the impact on the European business of the company, given the fact that the CBAM regulation has kicked in starting January 2026. But let me talk to you about the margins figure that has come in, which is at 12% versus 13.6%. This is down by 156 bips. What do you think led to the margin contraction?
Yeah, so the sequential margin contraction was somewhat expected because of the impact of Novelis on its EBITDA. So because of that Oswego fire and tariff impact, they have taken some hit of some few $1 million there. So $54 million impact in adjusted EBITDA is due to Oswego fire and $34 million is from tariffs. And that has resulted into the sequential decline in the margins. But I think Street knows that. And going ahead, the company has also guided that the EBITDA will be impacted to the tune of $150 to $200 million because of this Oswego hot mill issue. But overall, in the medium term, we like this company because they have a good set of expansion projects, both at India and Novelis, and the Bay Minette capex at Novelis is on the cusp of expansion. So a few quarters, maybe 2 to 3 quarters, we will see the impact of the Oswego fire and its related expenses, and that will weigh on the Novelis EBITDA per ton. But once the insurance claims comes back, the thing should normalize there. And with the strong aluminium prices, the company is well placed. So that is the overall view.
All right. The company is well placed, so we've seen a little bit of margin contraction that has come in, but overall you remain bullish on the numbers of the company. But thank you very much, Mr. Valikar, for taking the time out and help us decode these numbers and your assessment of what these numbers hold for the company, not just now, but in the coming few quarters as well. Thank you very much once again. And ladies and gentlemen, with that, it's a wrap on this edition of News Now. Thanks for watching.